through today, so I'm not going to spend too much time going through all the frou-frou stuff in the beginning. Okay, there we go. There's Stacy Roberts, and then also a picture of myself. So Stacy is physically in our Denver office, and I am out of our Phoenix/Scottsdale office. There's our contact information, and I believe everyone kind of has the handout. So if at the end we can't get to your question or you have questions later on, you can use our contact information to reach out to us. So last night, Stacey and I were talking about, we realized that we have kind of duplicated our bullet points here, so I apologize for that, and we'll be adjusting that. We're going to go over how to register a business in Nevada. We're also going to go over some sales and use tax. We're going to touch on WAYFAIR, which has been everybody's favorite topic lately. Stacy is the one that's going to dive into the commerce tax, and then I'm going to kind of go over some audit information in Nevada, and then also how to close a sales tax license in Nevada. So one of the things that comes up a lot when we're talking to clients is the NEXUS word. And I have put up here some different types of NEXUS, and this is not all-inclusive, but these are the major ones. Each state has different types of NEXUS standards. So they've got click-through, affiliate, economic NEXUS, which is a big deal. And if you think economic NEXUS, that would be kind of synonymous with the whole WAYFAIR case. Thank you, Massachusetts, for creating the cookie NEXUS. We're not going to get into that for the Nevada state, but if you're ever curious, you can Google cookie NEXUS. It is a real thing. So we're not going to go through all of them, but I just wanted to illustrate to everyone, these are the different types of nexuses that are in the various states, including Nevada. Okay, the big one, and this is what everyone has been familiar with in the past, assuming that some of you are somewhat familiar with sales tax, is the physical presence standard. And sometimes when we talk to clients, I often get the example of, well, we don't have a building there. Well, physical presence is much more than a building. Physical presence extends to, you have someone that comes into the state regularly to do business, like they could fly in, fly out, but they were physically in this state. It also includes third party, so those of you that happen to be like fabricators, or maybe you're a contractor where you utilize, maybe your people don't go into that state, but you utilize a third party to execute a contract or warranty, that can create physical presence by utilizing that third party. That is something that comes up a lot. So just keep in mind that does create physical presence. Selling stuff at a trade show. Now, if you sold something one time at a trade show and you never went into Nevada again, I don't know, I'd say that's borderline. But if you're going to these trade shows regularly, you know, I know gem shows are really big, or, you know, maybe you're in the building industry, so you've got a lot of, like, you know, house building, commercial stuff. I mean, selling those types of things at a trade show can create physical presence. If you think about it, you're bringing your inventory into the state and you're selling it, maybe not at your location, but you're selling it at a venue. Sometimes the states will consider any sort of assembly, install, service, or service repair or repairs, depending on how you bill it, could be considered creating physical presence. And then we're also going to kind of dive in when we get into the WAYFAIR slides about shipping into Nevada. So just really quick, registering for a sales and use tax license in Nevada is surprisingly simple if you guys have ever been on some of the other states' websites. So I put the website here. You can Google it and pop it in. It's really easy to just fill in some of your basic information. What you'll need to know is some of the owner information, kind of like what you plan on doing on an annual basis. A lot of states ask for your NAICS code, which is kind of like your industry code. They do have 2 YouTube videos that are on their website. If you kind of have to find it using that link, that will, if you get stuck, can kind of help you. In any situation, we always recommend filing online, just for, number one, it's easier, and then number 2, it's not as easy for the states to process paper anymore, and kind of like as we move into 2019, less and less our state's going to allow taxpayers to file paper returns. Nevada is no exception. There is they have one time a year where they do a renewal, and if you have an online account, you can do your renewal online, which is so much easier. So let's chat WAYFAIR really fast. I don't know what everybody, I can see who's attending, and we kind of have like a blended background here, so I'll just kind of do baby steps. There was a case, gosh, it feels like it was about 90 days ago, where the old early 1990 Quill case was overturned. So essentially what it means in plain English is the requirement for physical presence is kind of no longer a thing. As of right now, there are approximately 35 states, and there's only 45 states that have sales tax. So 35 states of the 45 have already come out with new economic presence standards. What that means is you don't have to be physically in the state, you don't have to go there for a trade show, you don't have to have anything executed by a third party. I mean, physical presence standards still exist, don't get me wrong. This is just a new set of standards. It's a new way for the states to now say, you have NEXUS in my state for sales tax purposes, and now you need to file a return. So this is what, and anybody can find this on the Nevada website. This is some of the proposed regulation for Nevada. So they're proposing that any gross receipts, gross revenue, that's going to be over 100,000, or any transactions, any over 200 retail transactions. So how does anybody account for that? And Stacy and I have done quite a few, and our firm has done quite a few webinars on WAYFAIR. What this means is, let's say this regulation goes through and it's effective 1/1/19. What you would want to do, if you are a controller, if you're a CFO, or somebody has put you in charge of figuring out the sales tax issue, is you're going to, on 1/1/19, you're going to take all of your revenue by state, hopefully you're sourcing it correctly, and pull the back 12 months. So hypothetically, 1/1/19, you pull all your revenue, you see in the state of Nevada, oh my goodness, we did $200,000 of revenue, gross revenue. This is not net. This doesn't include anything else. This is your big number. Then you would hypothetically have a sales tax filing requirement in Nevada. Sometimes we have different e-commerce retailers that, maybe they didn't do 100,000, but they did over 200 transactions. That would be rare. Usually people hit the revenue side more, but you would still have NEXUS. So some states have the and, like 100K and 200 transactions or 100 transactions. Nevada's not proposing that. They're going to be either or. And this is, the or option is not only just for Nevada, it's all the other states as well. So this, as of right now, I checked the website last night, there was not an effective date that I could find, but we are keeping an eye on it. So one of the things I also wanted to mention, and I hear this come up with different clients, is there's the Streamline board or committee, I guess. The Streamline sales tax registration system is a great option if you are a taxpayer that is operating in almost every state that has sales tax. Even if you're a wholesaler, you're selling stuff all over the place. They're a great resource if you wanted to get registered in all those 24 states, but I would caution you that signing up for that type of system, you're not going to want to file and then with the Streamline board, and then now you're going to have to file in all these states where you technically may or may not have NEXUS. So in order to determine if you have NEXUS, you're going to want to reach out to whoever your accounting professional is, who your advisor is, and then they can help guide you, or they'll reach out to somebody they know or us to help determine, okay, where do you really have NEXUS? And that's, I wish we would have put a slide in here, Stacey, maybe we can do that next time, is that we have a tool that our company has developed, and this tool is something that we take all your revenue by state and we dump it in using the current regulations, and we can tell you exactly where you have hit all the economic presence thresholds. So if that's something that anybody's interested, you can feel free to email us about doing that. So, oh, we already have our first polling question. Okay, so WAYFAIR remote seller requirements are being adopted more and more by more and more states. The consequences for not complying can be significant. How aware of you, how aware are you that the states have put out their compliance standards? Are you very aware and you've taken steps to be in that compliance? You've heard of it, but you haven't done anything, or this is the very first time you're hearing about the remote seller requirements? Oh, okay, we have a blend here. Okay, so for those of you that have, okay, good. So wow, I would have thought it would have been a little bit different. So for those of you that have heard of it and you haven't really done anything yet, I realize that getting into compliance is complicated, and my favorite thing to say is any company can go broke trying to get into compliance, especially for those of you that may be wholesalers and you're like, well, why do I have to file if I don't owe any tax, or how am I supposed to do this, right? So one of the things that, depending on when everybody's year end is you probably, my biggest suggestion would be to start whiteboarding where you have potential risk. Just because I put out the 35, states have come out with these economic statistics doesn't mean that we all have to go out and start filing in all these states. You're going to want to look at the states you have the biggest risk. A lot of people are scared to death of California. If you pierce the, the corporate tax threshold in California, you might want to start filing in California. It's all going to be a case-by-case situation. I'm trying to advance the screen. It's not working. Okay, there we go. So just as a caveat before I kind of hand this over to Stacy, is that if you guys are concerned that you may have hit the threshold in a couple of states, I mean, we can talk to you and kind of come up with a game plan. So kind of what I call whiteboarding it before you go into your new year. So with that, I'm going to hand this over to Stacy, and she's going to talk commerce tax.
Okay, thanks, Laura. Hope everybody can hear me. And okay, so most of you are probably aware Nevada doesn't have an income tax. They probably never will, whether it's for businesses or personal. But traditionally, what Nevada, what their revenues have really come from gaming, as you can imagine. But as they were kind of looking a few years ago at their budget, they had a shortfall, and then they decided, well, you know what, we're going to go ahead and institute a gross receipts tax. And so that is what the commerce tax is. It's been around for a few years now. We spent a lot of time early on trying to understand what this tax was, what the ins and outs of it are. So I'm going to go through some slides. Some of you may be familiar with this, so some of this just could be kind of a review, but I want to spend a little bit of time going through some of this, and also in the wake of WAYFAIR, just for people to kind of keep in mind that, these NEXUS standards are different. So, the NEXUS standard for the commerce tax is not necessarily the NEXUS standard for the sales tax in Nevada, at least not yet. So just keep that in mind. So right now, for the commerce tax, physical presence is still the norm. That is how you would be subject to the commerce tax. The $4 million threshold still applies. So the commerce tax, you don't actually owe a liability unless you have over $4 million of Nevada revenue. And then all sorts of business entities are subject to it. Early on, when they were passing this law, there were a lot of different moving parts, and so I actually sat in on some of the reg hearings when the Nevada commerce tax came into play, so it's kind of interesting to listen to some of the taxpayers that would get up and discuss, what about this kind of entity, or if you're going to tax this kind of entity, why not this other type of entity? So it was really interesting to kind of see the commerce tax come into fruition, but here's the types of entities. Pretty much every type of entity is subject to the commerce tax. And again, it's physical presence based, so you can imagine that they have a lot of different guidelines as to what is physical presence for purposes of the commerce tax. First and foremost, if you are an entity that is incorporated or organized in Nevada and or just registered with the Secretary of State, you automatically have a filing requirement for the commerce tax. You may not owe anything, but you have a filing requirement. And then any kind of location, so these are pretty obvious, but having, you know, a place of business, having employees or contractors, agents in the state, and then soliciting any kind of sales. You know, another thing to keep in mind here is that this is a gross receipts tax. So anybody who's curious about Public Law 6072 and the fact that, oh, I may be, let's say I'm out of state and I'm sending employees or reps into Nevada to solicit sales of tangible personal property. Well, because this is a gross receipts tax, Public Law 6072 does not apply. Public Law 6072 only applies for net income-based taxes, so this is not one of them. So any kind of solicitation in the state would be nexus creating for the commerce tax. Furthermore, performing contracts, entering into franchises, delivering goods in company-owned vehicles, maintaining inventory. Again, some of these are fairly obvious, but good reminders that if you have this type of presence, then you would have nexus for the commerce tax. And then performing services, whether that's through W-2 employees or independent contractors or agents. That can be, you know, installation, repairs, conducting training classes, technical assistance, handling or resolving customer complaints. Again, some of these items that may fall under a Public Law 6072 scenario. Anything that is there that's maybe in that scenario would actually be nexus creating for the commerce tax. And then participating in shows, theatrical performances, etc. Rental, so, you know, when you have leased property in Nevada, that can be problematic for the lessor and the lessee. And then management, so we've got situations where you could have boards of directors doing business in Nevada. You could have partners that are partners in a partnership doing business in Nevada, and then holding companies when you have entities that are earning fees for maintaining that place of business. And that brings us to our second polling question. Do you have employees or agents traveling into Nevada providing services? Yes, no, I don't know, but I better check. And I think, you know, a lot of the reasons why we ask some of these questions is because we don't want people to get confused with the fact that, you know, maybe you have W-2 employees, but don't forget about agents that could be working on your behalf, not just in Nevada, but other states as well. So, okay, so it looks like we've got a very few that don't know but want to check, but we kind of got a split there on yes and no. So, all right, we're going to move along. Maybe? Okay, so the commerce tax is kind of broken up, and if you have the form, this presentation kind of follows along with the way the return is actually displayed on the form. But basically, you're starting with your gross revenues, and then you're taking away some things that either may not meet the definition of gross revenue, or there's certain deductions and exclusions. So basically, gross revenue kind of is what it sounds like. I mean, anything, if you're performing services in Nevada, that's going to be gross revenue for Nevada commerce tax. If you have a sale or exchange of a property in the state, then that's going to be gross revenue for Nevada. And then possession of property, so for example, if you sold inventory, then you would have gross revenue for purposes of the commerce tax. Like I said, there are some exclusions, not to be confused with deductions on the return. So there are a few things that just do not qualify as gross revenue, so they would not go into your gross revenue citus to Nevada on the return. Basically, some of the highlights would be complementary items. So, for example, when you have like a casino, a lot of times they comp clients or customers. That would be an exclusion. So any kind of value that would be assigned to that comp, that would be excluded from gross revenue. And then sometimes I get questions on federal transactions. So when you have like mergers and acquisitions or corporate reorgs, a lot of those, any kind of gain or anything on those transactions, that would be excluded from gross revenue for purposes of the Nevada Commerce Tax as well. So we talked about exclusions. So those just are not going to go in the top part of the form. So they do not meet the definition of gross revenue. But there are then specific deductions from gross revenue that can be displayed on the return. And a lot of these deductions in this first part are industry specific, meaning that, for example, when you've got gaming receipts, those are subject to a different type of tax in Nevada. So therefore, because that industry is already paying tax, they're paying like an excise tax or gaming tax or whatever the case may be, those particular industries then get to deduct those types of receipts. So, you could have a hotel that has a casino in it, and some of the hotel's receipts then would be subject to the commerce tax. However, any casino, anything related to the casinos would be excluded because that would be subject to a different type of tax in the state. So that's really kind of what those industry-specific types of deductions are getting at, because those types of industries are already paying a different type of tax in the state. Then there are deductions for pass-through revenues, which is actually distributive shares. So what that means is a type of pass-through revenue would be, let's say that you have an interest in a partnership, you would not be including the distributive share of the partnership in your gross revenue calc for the commerce tax. It would be a deduction. And then dividends and distributions, and then there's some asset dispositions as well under the IRC that are deductions from gross revenue. A couple things to keep in mind. Only deductions specifically stated in the commerce tax law are allowed, and then you don't get the opportunity to double dip. So you have to have included those receipts. So for example, with the gaming, so let's say you had a hotel that had a casino in it, then you'd be including 100% of those receipts in the top of the form, and then you'd be excluding then those gaming receipts in the deduction section. So you have to have them already included in gross revenue in order to deduct them in the deduction section. Okay, so that brings us to our third polling question. Receipts from an IRC 338H10 transaction would be included in gross revenue in the commerce tax calculation. True or false? Oh, we said true. It's actually false. They're not. It's not. Those types of transactions are not included. Okay. Moving right along. Okay, so as I mentioned, we have gross revenues, and the way that the return works for the commerce tax is that they want the revenues to be put on the form as if they're already Nevada cited. So meaning whatever is sourced to Nevada would go on the gross revenue lines at the top of the form. So figuring out how you citus those, meaning how you source those to Nevada, there's different rules, but I mean, some of it's pretty obvious. So, rents and royalties are going to be sourced to Nevada if the property is in Nevada. Sale of real property, same thing. So if there's real property that's in Nevada that's sold, then it's going to be Nevada cited. For transportation services, they have a little bit different rule than some states that you have to have the origin and destination of that transportation so it has to be an origin and destination in Nevada for it to be a Nevada sale. And then services are sourced in Nevada basically if that service is performed in Nevada. However, there are some rules that we'll talk about in a little bit about that. Okay. Then, once you figure out what your Nevada source revenues are, you take away out your deductions, then you have to apply a tax rate. And Laura mentioned earlier about the NAICS code for the sales tax registration. For anybody who's not familiar with commerce tax, the commerce tax the rate is based upon your NAICS category. And then over time, they've kind of adjusted these rates, but there's lots of different categories, lots of different rates, but this is basically the scale of 0.051% up to 0.331%. When the commerce tax was first passed, there was a lot of administrative issues with, okay, how do I know what my NAICS code is? And so basically taxpayers were informed to select their NAICS code on their first commerce tax return. So anybody on this call who's maybe needing to register, just know that you will select your NAICS code on the first commerce tax return. If you have multiple revenue streams, then you're basically picking the NAICS from the highest percentage of Nevada gross revenue. But if you're in a type of business that maybe you've got different revenue streams and it can change from one year to the next on which is the highest percentage, then you have the opportunity to change your NAICS code after your filing. I believe now they have a form. They didn't used to have a form, but I believe now they have a form that you can submit to change your NAICS code. So then once you know your NAICS code and you know your rate, then you're calculating your tax. So this is just kind of a summarization of the CALC that I just kind of went through. Again, following along with the way the form is presented, you're determining your gross revenue. Don't forget that you've got the $4 million threshold. You're making adjustments, whether those are, your deductions, if they're industry specific, like I talked about with the gaming, for example. You're figuring out how much is cited to Nevada, meaning, okay, how do I determine my sourcing of those revenues to Nevada? Then I'm subtracting that $4 million threshold. Anything that's left then would be subject to the tax based upon my NAICS category and the rate that applies to that. Interestingly enough, for those of you who are not that familiar with the commerce tax, it is based upon the state's fiscal year. So we have got a lot of calendar year taxpayers out there, for example, right? They're calculating their financials at 12/31. Well, that's not the reporting period that Nevada wants for the commerce tax. It is actually the period of July 1st through June 30th, which corresponds to the state's fiscal year. Then the tax return itself is due typically on August 14th. It's 45 days after the close of the state's fiscal year. If the 14th were to fall on a weekend, then it would be the next business day. There is a 30-day extension available for good cause. They didn't used to have a form for that, but they do now. So just know that that's out there. It used to be that you had to write a letter, but now they have a form. Okay. So just a few things about the compliance here. I mean, I know that's kind of what we've been talking about this whole time, but I just want to go through a few little things for people to keep in mind with respect to the compliance part of it. We're going to talk a little bit more about these specific items before I turn it back over to Laura for a few more things on sales tax. But at first, when they were looking at this commerce tax, they were trying to decide, do they want to make a combined election? Do they want to have it be consolidated? So if you had an affiliated group of taxpayers, would they need to, could they have that ability to file on a consolidated basis? Well, ultimately, they decided against that, and it is an entity-level tax, so each business entity represents one filer. Series LLCs are treated as one entity, which is a little different than for Fed. On the NAICS code, so, I don't want people to get too bogged down in, okay, what is my NAICS code? Really, for purposes of the commerce tax, if you were to look at the rates, if you pull the code, really the only digits that matter in the NAICS are the first two. So again, like I said, don't get too bogged down in your NAICS code. There are some registration materials on the website that are really good. So if you're in a situation where you're kind of wondering, what do I need to do? This happened to be a little bit more of a nightmare when this first came out, as you can imagine, right? Because the law was passed and then the department was grappling with how to enforce it, administer it. And so they came up with a registration flow chart, which is actually fairly good. And it kind of leads you through what you need to do if you do need to register. And then there are a couple additional forms that the state requires. There is an exempt entity form, so there's a situation where certain entities are actually not subject to the commerce tax, and there is an exempt entity form out there. One thing that was a little bit controversial at first was that the commerce tax return only provided a spot for the Nevada tax ID number, which was actually the ID number that is issued by the Department of Tax. Well, since then, over time, they've added a spot for the Secretary of State number. So that caused a little bit of heartburn for some taxpayers at first, but they have a spot for both now. So you can file the return under either number now. So this is just a snippet of that registration flow chart that I mentioned. Again, it's just kind of nice to know what you need to do. And this was probably a little bit more, it probably meant a little bit more once once the commerce tax came into being, because we did have a lot of clients and taxpayers out there that were grappling with what to do. And like I said, the Department of Taxation, they were struggling with even how to respond in some ways. So I mentioned earlier one thing to keep in mind on sourcing for services. They do have a couple different rules that you can follow for sourcing services that might be worth taking a look at, depending upon your facts and situation. But for service receipts, there is an alternative test. Basically, they're saying that you can source the receipts to Nevada based upon the proportion that the purchaser's benefit in Nevada bears to the purchaser's benefit everywhere. So that sounds very common to maybe even like a California, which is like if the benefit of the service is received in California, then they want a piece of it. Or at the election of the service provider, you can source to the principal place of business or individual's residence if that's where the customer receives the benefit. So depending upon, like I said, the facts and circumstances, you might want to look and see if sourcing the service receipts might be beneficially sourced one way or the other, because they allow either one. Okay, I've kind of talked about this a little bit, but just something to keep in mind again. Really what the commerce tax is getting at is operating receipts. Also, do not forget that they want all numbers presented as Nevada situs numbers. So, this is kind of a good rule of thumb anyway, but keep good work papers so that you can tie back to your source documents that it's that those are Nevada numbers. And I mentioned this earlier, but to the extent that you've got situs gross receipts that are at gross, meaning gross, at the top, then you want to make sure that you can take anything out in the deductions section. Or you can report them net up at the top, but just make sure that you're not double dipping. And then just as another caution, I think you saw some of the deductions. That was not an all-inclusive list in that slide that we had earlier, but don't get these deductions confused with federal income tax deductions. These are really more to be thought of as adjustments from the commerce tax, because this is a gross receipts tax, so it works a little bit differently. Okay. So So I mentioned earlier that taxpayers are only subject to the commerce tax if they exceed the $4 million threshold, which for some taxpayers is pretty high, right? So they may not exceed that $4 million threshold, well then what do? Well, they don't owe anything, but there's also a simplified reporting method if that's the case. So you'll note that the pieces of this return that you need to fill out in that case, if that's you, that you do not exceed the $4 million threshold, then these boxes that are in red here are the ones that have to be filled out and then submitted. So there's the opportunity here at the top of the form to just check off the box that you do not exceed the $4 million threshold, sign it, send it in, date it, send it in, and you've fulfilled your filing for the year. Interestingly enough, the commerce tax does not have a non-filing penalty. Like I mentioned earlier, if you're registered with the Secretary of State, if you're a Nevada formed entity, if you have NEXUS, you need to file a return. You may not owe anything. So back to the previous slide, you just check the box and that you are under the threshold and then submit the form. However, they do not have a penalty if you don't file. There's no tax due. So I mentioned earlier, it used to be that you sent a letter, but there actually is a form now for the extension. So you can get a 30-day extension for good cause. Waiting to obtain additional information is good cause for purposes of this. And then what's interesting about this extension is that it extends the time to file and the time to pay. However, interest is due on the 30-day extension. So you're not going to get penalized if you make that payment in 30 days, but you would be charged interest on it. So the other thing that the commerce tax allows, which may or may not be more complicated, quite frankly, depending upon the taxpayer, is that they will allow you to estimate your commerce tax. So they will allow you to report basically on your federal period, and then basically put two federal periods together, and you could arrive at an estimate, and then you could then you need to amend your return. So it's not the best, but for taxpayers where maybe they can't pull the information on time, then just know that there is that opportunity to file an estimate and then amend once the information is better. And that brings us to our fourth polling question. Extensions for the commerce tax return extend both time to file and time to pay. True or false? It is true. Okay, now I'm going to turn it back over to Laura, who's going to go through a few more sales tax issues in Nevada.
Thanks, Stacy. So, depending on what kind of industry you're in, and if you guys are part of a company that a very typical company, you probably started maybe selling or doing services for one thing, but as you've grown, you're probably offering multiple service lines. I see this so many times where a company that just did software, now they do software and maintenance, and now they do maintenance and, who knows, then you're doing like licensing, you're doing cloud computing stuff, or you're executing a warranty. Pretty much a rule of thumb that's anything that you're selling that's tangible, and most things that are tangible, you can touch it, I can order it online, and it's something I can put in my hands, that is going to be taxable. What you kind of need to realize is that If you're selling something that is tangible, we call TPP, tangible personal property, and you're offering a service with the sale of that tangible personal property, some states will view that as taxable. This is kind of a list. This is not an exhaustive list. I get a lot of questions about medical supplies. People just assume, oh, because it's for medical purposes, or this is a component that may go into something else, potentially for a fabrication, that it's not taxable. That's not always true. So I would just caution you, depending on the kind of line of business that you're in, is that if you have not done a taxability study, especially in Nevada, to determine if what you're selling is taxable, and you may be in one of those gray areas, it probably is a good idea, since we're in this WAYFAIR, post-WAYFAIR world, just to figure out, do you have NEXUS in Nevada? And then if what you're selling in Nevada, is it taxable? Those are the two steps. If I could provide any sort of free advice, that would be the free advice. Determine if you have NEXUS and determine if what you're selling is taxable. I get a lot of questions on like, well, what we mainly provide is a service. Well, some places services are taxable. Look at New Mexico. They tax services in general. So just keep that in your back pocket. Nevada has some very, I wouldn't say they have any crazy rules, but you want to kind of dig in just to make sure that you're actually taxing your item or service correctly if it is taxable. Sourcing. So Stacy had mentioned sourcing for corporate tax purposes, not to make things more confusing. There is different sourcing when it comes to sales tax. So there's this weird thing called origin versus destination. So I'm in Arizona. We're an origin-based state. So the sales tax rate for retail business class is going to go off of wherever your brick and mortar is, wherever your business is from. Nevada is a destination state. So let's say I'm a Arizona company that has NEXUS in Nevada. I'm shipping something into Nevada, like to Reno. Wherever I'm shipping it to, we call it a ship to, that is where you're going to source your sales tax. It gets more complicated if you're doing a ton of online sales and everything you do is online. Then you probably either need to or have already executed some sort of like open API where you can get the sales tax rates currently. So you could just do it that way. But it's really important that you're sourcing your sales correctly. It is probably the #1 thing next to exemption certificates that is going to catch you in an audit. And I wanted to talk about audits because I have personally gone through, I think, at least 3 or 4 Nevada audits this year, all sales tax related. So for those of you that have not had the lovely experience of going through a sales tax audit, these are just some basic 6 high-level steps. Usually there's some sort of request for information. There's a pre-call when hey, this is what we're doing, or they send you a letter. If they send you a letter, depending on what that letter says, the state of Nevada, I would not ignore it. If they send you an audit letter and you don't respond, a lot of companies don't know this, they can assess an audit based off of best information available. So you don't want them creating an audit with, I don't want to say made up numbers, but industry averages. So they're going to do that. They're going to look at some data analysis. I don't know if Nevada does stat sampling. There's not very many states that do stat sampling just because of the level of expertise it takes to do stat sampling, but it is something that what they do called block sampling or monthly sampling. So if you're in an audit, you can, they'll request like, January or 1 to 2 months out of each year for the audit. Then usually there's a summary of findings that comes along with an audit. I would double check that pretty carefully. I've definitely, I think my whole career, I've easily done, I don't know about it, in the thousands of audits. And you would be surprised how many times something is marked as taxable when in the work papers when you realize that no, it's not taxable. And then after you submit, your work papers and they review it and there's no issues, they do like a conference. So here's some kind of caveats for after the audit. You want to make sure that if you're your own sales tax expert, that's great. But if you're not, I would reach out to somebody that is, because an audit, once I call it like they go permanent ink, like that's it. once you've passed the appeal process, you cannot go back and change it. So you want to make sure that it's accurate as possible beforehand. One of the things that auditors don't necessarily always look for are special exemptions. So if you ever go through an audit, you need to understand that everything is going to be taxable until you prove it is not taxable. This includes exemption certificates, this includes resale certificates. They have to be current, they have to be accurate. So that's one of the things that a lot of our clients struggle with, is that they go through an audit and maybe they don't have all the documentation and they're scrambling. It's just considered a hassle. So I would really suggest that in order to be proactive, figure out first where you have NEXUS. Do you have NEXUS in Nevada? And then second is, what you have is taxable? And then kind of as a best practice, we always recommend of maybe once a year, not to do overkill, is kind of go through all your sales tax stuff and make sure that you're at least 70 to 80% in compliance. What we see a lot is companies are on this huge trajectory of, growth, and the sales tax part kind of gets set to the side, right? It's just like, oh, sales tax, I don't want to deal with it. Well, that's fine, I guess, until there's an audit that happens. The states are getting more and more aggressive when it comes to auditing. There are 5 states right now that have already started sending out, hey, we think you have NEXUS lists, and I have seen them. So just to be proactive and make sure that you guys are on the right page, so you don't get found for an audit, is just to look at it once a year. Look at your sales tax, make sure you're in compliance. And if not, then create a plan on how to get there. If you decide, oh my goodness, we are never doing business in Nevada ever again, you can't just pull out of the state and stop filing. That is a bad idea. There's certain protocols that you have to do, just like with any time you were to, you don't want to just stop filing in California. You have to do certain things. So you have to, oh, what happened to the slide? You have to mark final return, close a business. You actually have to tell the state, I'm closing my company in the state of Nevada. There's usually a little checkbox or something you can click online, or if you fill out a paper form, there's a box that will tell them, this is my final return. I'm closing my business. You would need not only to do that for sales tax, you have to do that for the commerce tax, and you also have to do it at the state level with what we call the SOS, which is Secretary of State, to technically, quote unquote, pull out of the state. So one of the other things that I kind of wanted to mention really quickly is that for those of you that operate in multiple business lines, this is before we hit our last polling question, if you're operating in multiple business lines and this is just kind of, a lot to handle, what a lot of companies don't realize is that you could have one entity that has sales tax NEXUS and you're going to close out a business, and then you have another entity that still needs to operate in that state. So if you're in charge of doing sales tax or corporate tax, business income tax, whatever, you need to realize that for sales tax purposes, this is where it differs for corporate tax, for sales tax purposes, you would get a license by your EIN. So if you have 10 different companies with 10 different EINs, they all need to have technically their own sales tax license number. I have found, and that decreases your risk. I have found a lot of companies that put everything under one company and all the revenue just flows through that company for sales tax. You're not going to want to do that. You should not be blending those types of accounting transactions. So just as a little caveat from somebody who's been through Nevada audits and understands how they work, understanding how to open properly, understanding how to tax and remit properly, and then closing is really important. Okay, and so this is our last polling question. I hope I clicked on it right. What would you like to see in future presentations? We have a lot of people that reached out to us for economic nexus implications, and then state income tax implications, and then surviving a state and sales and use tax audit. The biggest one that we've had recently, and I'll kind of keep talking while you guys are remitting your answer, is that when we had our WAYFAIR presentation, and that was in August, and we're doing another one in September, that so many people were confused. There's a lot of misnomers out there like, well, we're just waiting to see what happens, what shakes out. There's some states that are just not messing around, and they are going out there in full force. So Nevada's not one of them right now because they have not technically issued an effective date, although it's coming. I would expect it to come. So now is a really good time to, you know, have those conversations, whether it be with you and your accounting advisor, or maybe, you know, if you report to like another decision maker. The economic nexus thing is not going to go away, and it's only going to make it more difficult. So I feel like a broken record when I say that we're trying to really get people to realize, okay, it's out there, it's happening, here's what we can do. Let's start planning to get in front of it. So you're not we're not in the middle of 2019, and now we've kind of got like more of a more serious issue. So that's all that we really have for today. I don't think we had any questions in the box. I don't believe so. If anyone has any questions afterwards, or if you'd like clarification, or if you're really confused about what the whole economic nexus thing is, which by the way applies to both taxes, corporate and sales tax, you can feel free to reach out to us, and we'd be more than happy to help you.
All right, last call for questions if there's anything that pops up in the chat.